Hey, what is up, all of you beautiful subscribers? This is the Jack Chapple Show, and we're going to be talking about the top 10 stocks that are owned by millennials. So this was a report that came out recently from TD Ameritrade. So we're going to be talking about that. We're also going to be talking about some business news, stock market winners and losers, the Shkreli guy, the Pharma Bro. He jacked up all the drug prices. So we're going to be talking about him. We're also going to be talking a little bit about a funny story, actually. So we're going to get to that a little bit later. But let's start off here with the top 10 stocks that are owned by millennials. So again, as I mentioned, this came out from the brokerage TD Ameritrade, it's essentially the biggest online stock brokerage in the world. And so millions and tens of millions, maybe even hundreds of millions of people use this brokerage. And so one of the analysts released a report recently, and it gave 5 of the top 10 stocks that are owned by millennials. And then I kind of filled in the gaps here. I was able to find some more information through websites and through other analysts that said the other 5 remaining at the end here. And so this was actually quite shocking here. So let's just jump into it. What do you think is the number 1 stock that is owned by millennials? So people aged 18 to 34 years old. What do you think the number 1 stock is? I'll give you a second here. This is actually a common one, okay? So this one's okay. It is Apple. Apple is the most commonly owned stock by millennials. And so I'm going to give you guys my opinions on each of these stocks, and I'll give you my opinions on this report as a whole. So Apple, it's been a solid stock. Apple's not going bankrupt anytime soon. Apple has more money than God. And actually, it's there's only 2 dividend paying stocks on this entire list, on this top 10 list here. And so I'll give you my opinion on that near the end, but this is one of the stocks. It pays about a 1 to 1.7% dividend. So Apple's a solid stock. As you guys know, I bought this maybe 3 years ago, and I made a lot of money on it. It shot up along with the Canadian dollar changing values, I made like 84% in 1 year on an Apple stock, essentially. So Apple, great stock. They're not going bankrupt anytime soon. Wow, their share price was 58 cents in 1981. Now it's $145 per share. Or no, sorry, $145 as of today. It peaked at $156 just about a month ago. And so Apple, great stock. Great company. I don't really have many problems, apart from the fact that it is overvalued right now, along with essentially every other stock on this list here. You're going to see a trend. We're going to move on to number 2. What do you think is the number 2 most commonly owned stock for millennials? Again, this is just a stock which you would think that millennials would own. Facebook. Facebook is the number 2 most commonly owned stock by millennials. And so Facebook, they're just another great staple company. They have a market cap of $456 billion. They're worth more than Amazon. People don't really realize that. As of right now, actually, they're about the same, I guess. And so Facebook, are they overvalued? Maybe, but they don't have a lot of expenses. They have a lot of income. So Facebook, another staple company. We're going to move on to number 3 here. You're going to see a trend here. Number 3 is Amazon. Number 3 actually just passed Facebook for market cap. They're valued at $483 billion right now, which is, $17 billion more than Facebook, what I just mentioned. So Amazon's number 3. Again, Amazon will probably be a great company going into the future. They are overvalued as hell. Actually, they have a PE ratio of 186, price to earnings ratio. Apple's is 17, which is great, actually. Apple's is only 17. That's actually, considering Apple's the most valuable company in the world and their PE ratio is only 17, that's fantastic. And Facebook's is 38.9. Amazon's is 186. And so Amazon, again, great company. All the millennials use it. I use Amazon. Again, another good investment there. However, is it a good stock? I'll leave my comments to the very end here about these stocks as a whole. So we're going to move on here to number 4, Tesla. Number 4 is Tesla. Again, this is one of the most, they don't have a PE ratio because they haven't made a profit yet. But Tesla, very overvalued right now. Stock price is about $327. Again, millennials, this is a cool thing, new energy. I'm all for Tesla, but it's the 4th most commonly owned stock right now. Meanwhile, there's other good stocks out there. We're going to move on to number 5 here. Number 5 is Netflix. Again, this is something that all millennials use. Are you seeing a trend here? All millennials use Netflix in some sort of way. Market cap of $67 billion. It's done very well since, it's been a public company since 2002. I didn't know that. I thought it was more recent than that. But Netflix, again, a good company. Another tech company. Are you seeing a trend? Number 6 Nvidia, this has all happened this year. One of the reasons why Nvidia's stock price went way up is because millennials decided to trade a lot in the past 2 years with Nvidia, plus they have had a little bit better earnings and revenue. But Nvidia, in the past year and a half, they've gone up 432%. Again, another tech company. They're a semiconductor company, I believe. Next one, number 7 here. Number 7 is Google. Another tech company. Are you seeing it? Another trend? Are you seeing this? Google, market cap $658 billion. They've been a solid company, good company for a long time. So again, that's number 7. Number 8 is rest all of your souls, Snapchat. Number 8 is Snapchat. They have been wow, they dipped 9% today. I didn't even add them to the stock market losers, but we are going to add them right now. Snapchat is a stock market loser today, so why is this? Oh, they got downgraded today. Snapchat got downgraded as a stock by Morgan Stanley, and Morgan Stanley was the financial institution that helped launch Snapchat. So this is something that we'd never see very often. Morgan Stanley is a pretty big financial, venture, had a pretty big financial venture with Snapchat, and they're downgrading them as a stock. So Snapchat, oh man, they're down 9% today. And since after their first day, their share price went up to $27. They are down 42% in the last 3 months. I was right. So Snapchat was the next commonly owned stock, number 8. So number 9 is Advanced Micro Devices. Again, another tech stock that has gone up and down for the past 30 years. Wow, they really got hit by the tech bubble, by the way. Their share price was $92 in 2000, and it hit a low after the tech bubble of about, they went down 94% after the tech bubble. And we're down 97% by 2009. Wow, so Advanced Micro Devices, number 9. Number 10 is Microsoft. The only other dividend paying company in this entire list here is Microsoft. So I actually do like Microsoft as a stock. Apart from the tech bubble, they've actually done pretty well and they pay a nice dividend. So what are my thoughts on all this? And what did you notice? These are all in tech. And this is what worries me whenever I get, guys, I used to get all your emails. I used to read all of your emails up until about January. I read all of your emails, all of your comments, all of your messages. And every single time it was, I want to invest in Twitter. What about Snapchat? Should I go for that IPO? How about the Blue Apron IPO? What do you guys think about companies like Nvidia? What do you think about Amazon? What do you think about they were only tech companies. And this is why I'm worried for you guys here that are all in for tech and not going into anything else. Now, I'm not saying that there's a tech bubble. Okay, I'm not saying that whatsoever. However, there was a very nice comparison here to what happened with your parents from the 80s and 90s. In the 80s and 90s, your parents were investing in companies like Nintendo. They were investing in Sony. Sony and Nintendo had like 80% higher market cap in like 1999 than they do today. Actually, we'll take a look at this right now here. So Sony's share price during the tech bubble was 31,000, whatever the currency is in Japan. 31,000, okay? And as of today, if you had still invested in Sony in 1999 or 2000, you would have lost 85%. 85% of your money, you wouldn't have had a return yet. And Sony only pays a 0.5% dividend. And so, again, these tech companies, even though Sony's still a massive company, still doing okay, still doing well, multi-billion-dollar market cap, 5.61 trillion, whatever the currency is in Japan there. So, again, Sony a big company, Nintendo a big company, but they were a part of this tech bubble where all of the companies were so overvalued. So anyone that invested a lot in tech, in Sony, in Nintendo, I have the other companies here, Cisco, eToys, Pets.com, Flues, by the way. Flues and Beans were companies that were essentially cryptocurrencies. They were the cryptocurrencies of the late 90s and they went to zero. Not trying to warn you guys about Bitcoin or Ethereum because they could be very good investments. I'm not investing in them. They're risky, but that might be happening. GeoCities, another one. Like, these were big companies in the late 90s that were tech companies that were like, these are great. We're going to invest in them, even though they're barely turning profits, except for Nintendo and Sony. And we're going to put all of our money into this, into only tech. What happened? If you invested in the dot-com bubble in 99 or 2000 at the peak, and you held on to all of your stocks to today, you would still be down about 50 to 60%. You would not have had a return over the past 20 years. And so that's why I always say you got to spread it out. The top 10 stocks owned by millennials, sure, these are all the biggest market cap companies, some of the biggest market cap companies, but there's oil companies out there that like Exxon that pay a dividend, right, that are bigger than a lot of these. There's Walmart, there's McDonald's that pay a nice dividend. I mean, the biggest problem on this list is that Microsoft is the only one that millennials buy that pays more than a 2% dividend. And if you guys know, from my portfolio, if you guys check out my stock market portfolio program in the link below, you guys get to see what I invest in and have invested in the past couple of months, is like the vast majority of about half of my portfolio are stocks that pay a 3.5% dividend or more, and 70% of my stocks pay at least a 2% dividend, 2.5% dividend, minimum. Some pay 4.5%. I do own 2 of the stocks on this list. I own 2 of the stocks and they don't pay dividends, and they're my flyers. I always have the 80-20 rule, right? 80% in safe stuff that pay a dividend, 20% in stocks that are like tech or commodities or whatever. You want to go into some other risky field. Tech is usually the biggest one. 20% goes into that. And so my list is completely different than this. Completely different than this. I mean, my most owned stocks are ones that pay, again, about like a 3.5% dividend. Those are my most owned stocks right now. And so the fact that millennials are putting all of their money into tech stocks, which are very overvalued right now, and have been doing that for the past 2 years apparently, that is worrisome. And it's also really good because if this were to go to the crapper, this entire stock market over the next year or two, and there is some sort of tech bubble, if there is one, and the tech were to go all the way down and millennials all sell at the same time because they get worried, I'm going to make a lot of money. My stocks are going to go down, but they're going to be fine, and I will be buying up all of your tech stocks at a discount. I'll be buying them up, all of the Amazon stocks and eBay stocks after the tech bubble of 2001. And a lot of people are going to be selling. All these millennials here are going to get really emotional about these stocks if they go down. So that's my opinion on this. What do you guys think? I mean, actually, there was this analyst here from TD Ameritrade that was saying that they all trade the same. All millennials trade the same. And so what does that mean? What does that mean is that you're not going to have any advantage if you just trade in all of these stocks. Like, there's investors that say trade in what you know. I don't completely recommend that. Unless you know what you're doing. Here's the thing, is if you read up on tons of information and stocks in different markets like I do, I know a lot about what's going on in a lot of the sectors at all times, then, I can invest in what I know because I know a lot about everything. But however, the average millennial doesn't know crap about oil prices. You know what they do know? Twitter, Netflix, Facebook, because that's what they use. That's what they know about. That's all they look into. And so my advice to you guys is, I'm all for diversification. You don't have to, but you have to. I mean, in a sector like tech, that's the one sector you can't go all in for. That's the one you can't, unless you started investing in December of 2016 or November of 2016, then if you're investing right now and you're going all into tech, that's not a good idea. If you did it in November of 2016, you did very well. You probably had 30% returns. Congratulations. Hopefully you don't get bit in the ass by 80% in the next recession. So, man, sorry about this rant. It's just, this worried me. And this is why, I see other people out there talking about all these, penny stocks and, how there's people on YouTube and bloggers and social media people, they talk about all these tech, they're only going into tech stocks. They're talking about this is the way to go. And meanwhile, sure, they're going to have one that goes up 80%, like a Nvidia, right? And then they're going to have, the GoPros and the Snapchats and the Twitter that they don't want to talk about. And meanwhile, like me, I'm the steady investor. I mean, I think that, I started my new account just for an experiment I started a completely new brokerage account about 2 months ago, just so I can essentially experiment with you guys and say, look, my strategy is not full of crap, all right? and I've been putting in, thousands of dollars every single month and seeing how it goes. And, some weeks I'm up, 6 to 6.5%, 7%. Some weeks I'm down 4%. Some weeks I'm down 2%. Some weeks I'm up 4%. However, I'm never going to have these giant swings. Remember what happened a week ago when the entire tech sector went down like 4% in one day and everyone was freaking out and selling their stocks? That doesn't happen to me. That doesn't happen to me. I am diversified, and that's how you guys should be. That's how millennials should be investing. Sure, put some money in stocks. If you want to put even 30% in tech, 40%, 50%, go for it. But you gotta diversify in some sort of way. You gotta at least get some sort of dividend paying stock in there so you can have some sort of guaranteed return. Even going to bonds. I don't buy bonds, but even buying some sort of bonds to go along with all this tech investing, that's a smart decision. It's a smart decision because I'm just worried you're going to get too emotional about these stocks, about all these tech stocks, about all this hype, about all these people telling you how great all these GoPros and Snapchats and whatever Apple and Amazon and Netflix are. And then maybe in a year or two, they're going to hit the crapper. Tech stocks get hit the hardest when there's a downturn in the market. It always happens. You know what doesn't get hit hard? McDonald's. McDonald's goes up during a recession, during a stock downturn. Gold, well, don't invest in gold. What I'm trying to say here is that there are lots of companies that don't go down during a recession. Utilities companies don't go down during a recession. I invested in a couple recently. I think I have one or two recently. Utility companies, and I was looking at them. They went up during 2008 because they are not affected by stock market downturn. They still turn profits. They're a utilities company. Everyone needs energy. That's what I'm trying to say here. So, again, sorry for this rant. I needed to really get this off my chest here, and we're going to move on here to some other news, but I'd like to hear what you guys think. What do you guys think about this? How the top 10 stocks for millennials are all tech. One of them pays beyond a 2% dividend. The other is Apple that pays between a 1 and 1.7% dividend. And the rest are you're essentially just speculating with your money. What do you guys think about all that? I'd like to hear your thoughts down below. Do you like my strategy? Diversifying the 80-20 rule, 70-30 rule, 70% safe, 30% unsafe, 80% safe, 20% unsafe. What do you guys think about that rule? And where are you in terms of proportions? Are you 50-50, 90-10, 95-5? Or maybe you're the other way, you're 10-90. What are you? How do you invest in terms of safe to unsafe investment? So anyways, we are going to move on here. So the next thing I want to talk about is the Pharma Bro, Martin Shkreli. I don't know how to pronounce his last name. Sorry about that. They call me the Pharma Bro. So he is known as that guy that last year, 2 years ago, that jacked up his drug prices. He bought a company and jacked up the drug prices like 3,000%. Now, I'm just going to give you some additional information because people were all outraged about that, and okay, I understand it. However, if you dig into it a little bit, like 80% of the people who buy the drug had prices that were just unchanged, and like 10% had them go up a little bit, and like 10% had them go way up, whatever it was, 3,000%, and they all were covered by insurance. And so, not trying to like defend the guy in any sort of way because he did some other very sleazy stuff, which I'm going to get into here. But he also has an investing channel on YouTube. It's actually a decent channel. He uploads once a week, but he might be going to jail for like 25 years. So we're going to see how that goes. Anyways, let's get into this topic here. So Martin Shkreli, he is in court. He's getting sued. He might go to jail, not for jacking up drug prices 3,000% for the toxoplasmosis vaccine or whatever. It's actually for fraud. For something completely different. So what he was doing is he was buying those pharma companies. He also started a hedge fund in like 2011 or 2012. This is all allegedly, okay? So this is all allegedly. I don't have 100% certain facts on the numbers I'm going to give here, but this is all allegedly here. And so he's getting sued right now. And so he's getting sued for fraud because he was telling investors when he was... So hedge funds, for those of you that don't know, you're essentially going out, you're asking people, hey, I will invest your money for you. I will take 1 to 3% management fees, plus I will invest 50% of my own money for every dollar you invest. Somewhere around there. That's usually the deal that goes along with it. And so he was telling all these investors, look, I already have $50 million in funds in this account that I'm investing for other people. Why don't you guys invest with me? Now, normally that's okay if you say that. Like, it kind of gives you a little bit of street cred, I guess, and it makes people more comfortable to invest with you. However, he only had negative 33 cents when he was telling people that. He was actually down. He had zero money. He was actually down 33% in one of his bank accounts, in his brokerage account and bank account. At one point in time, when he was telling people he had tens of millions in these accounts from other people, he had major losses. Now, at no point in time did he ever have more than $1.6 million. This is all allegedly, okay? This is all allegedly, so take this all with a grain of salt, as I always say. He never at one point had more than $1.6 million in any of the accounts. Meanwhile, he was telling people, hey, I have 10 million here, 30 million here, 50 million here, and I'm investing it all for you. So why would he lie about this? One, well, yeah, it's to make people more comfortable. But two, he lost a lot of people a lot of money. Making really bad trades, speculative trades. He wasn't going the safe route. He was trying to beat the market, trying to do all these, potential, pharma stocks and all these stocks that don't pay dividends and all. He was doing the typical millennial strategy, I guess, is what I was trying to say here. And so he's getting sued for that. Plus, here's the kicker. At one point, he only had $50,000 when he was starting out in like a brokerage account of other people's money. And he took out $10,000 of that, allegedly, for tickets to a Jay-Z concert. Isn't that a little bit of a problem here? And so I've been a Martin Shkreli defender. Like, I've seen some of his stuff. I've been a defender. Like, people were, sure, jacking up your drug prices, but it's only in 10% of cases, so it's not as bad as most people are thinking. Plus, it's to insurance companies. I know people pay into that, but that kind of stuff. And so I was defending him on a lot of that stuff. Plus, he gives investing tips, which he shouldn't be on YouTube, by the way. If you're losing that much money and just betting and losing people's money and fraudulently saying that you have more money than you do. So he's at least trying to get investing tips out there into the world. And he has essentially been doing a little bit of like investing news, similar stuff to what I've been doing. So that's okay. However, when you're defrauding people out of money and you're lying to them and you're saying that you have 50 million in the account and you only have negative 33 cents, you should be going to jail for that. That's just my opinion. So this is all allegedly. I don't want to get sued or anything like that. And so what do you guys think about all this? What do you guys think of him as a person? Maybe you guys should go check out some of his talks. He's a really, really smart dude. He's just a little bit crazy. By a little bit, I mean he's pretty crazy. So what do you guys think about that? What do you think do you think that he should go to jail? Do you think he should go to jail for a few years, 10 years, 20 years, whatever it may be? Do you think that he should, I guess he doesn't have any money left. Do you think he should be just paying all that back? Do you think he should get hit with a fine? What do you guys think should happen to him? So I thought I'd update you guys on that because it was a really interesting story. I've just been defending him, and all these testimonies came out today, allegedly. And that was just really disheartening because when someone's very trusting in the public eye and frauds them out of money, it's just not good. So anyways, we are going to move on here to two more things. Floyd Mayweather. This is allegedly, the reason why he took this Conor McGregor fight is because the man, Floyd Mayweather, who had earned hundreds of millions of dollars over his, 2-decade career, going undefeated, the highest paid boxer of all time, he can't pay his taxes. He said to the IRS, can I pay the taxes after the fight? Why would he do that? He probably doesn't have money. He probably has spent all of his hundreds of millions of dollars that he has gotten through his fights and endorsement deals, and it's all gone. And this is the importance of financial education and not flaunting all of your money. I mean, actually, one thing I want to look at here is Floyd Mayweather check. He actually he posted a picture on his Instagram for a $100 million check. It was $100 million. He also posted a $40 million one, a $31 million one. And so he was posting these giant checks of tens of millions, hundreds of millions of dollars. And the IRS stumbled onto his account and said, hey, where's the tax dollars for that? The IRS actually was investigating him, auditing him, simply because someone found some of these checks online. Don't be stupid. Don't flaunt all of your money. Save it, pay your taxes, people. You know, sure, there's ways to get around some taxes in terms of legal ways to do it, but don't, if you make $100 million and you don't have any tax ways to get around that, you're going to have to pay 50 million of that to the tax man. That's in the United States, about 40 to 50 million, and in Canada it's 56 million. So that's a lot of money. Don't go flaunting that, and don't spend the remainder on, you know, a $50 million house. Because you're going to have to pay taxes, utilities, whatever. Those come out to millions of dollars per year. And all of a sudden, you don't have millions of dollars. You just spent it all in the house. Stupid financial education. So this is all allegedly stuff. Allegedly, he can't pay his taxes. Man, this is another athlete not able to use their money wisely. It's just all these stories, man. They happen all the time. Having an entourage of 100 people. You want that? You want that and be poor? Great. You're going to have a great time of your life until you're 35. And then you have no money. So that's another story. We're just going to talk about the stock market winners and losers here. Then we're going to close this video out here. So stock market winners, the two that I wrote down here were Tesla, up 3.5% today, and Twitter, up 3.1% today. Don't know why. No good reason for that. They were just up today. Now the losers. The losers were the fashion people in fashion. So I think Michael Kors stock, I believe. So Michael Kors, big fashion, they were down 7.3% today, which is pretty big hit. Again, we're just seeing another clothing company, retailer, going down the drain. This is just what we're seeing. It's the Amazon effect. Although this might be for a little bit different reasons. Maybe their earnings report came out today. I could not find a ton of information on them. But however, they're pretty far down. So actually, they've been down since 2014. They've been down 66%. So this might be an earnings issue here. I just could not find it. So Michael Kors is down. We're also going to talk about Ulta. Was it Ulta Beauty? I thought it was Ultra Beauty. Ultra Beauty Inc. stock. Oh, it's Ulta Beauty Inc. stocks. They're down 4.7% today. They were a pretty big loser today. They've been down since June 5th. They've been down 18%. Again, this is a beauty company, retailer selling high-end luxury stuff that's in stores. They're down. So let's see. What other losers do we have here? Chipotle. Oh, Chipotle. Wasn't there a story I talked about with them recently, about 4 weeks ago, where they were having some sort of scandal? So they're down 13% in June. They're down 2.81% today. And again, they're in some trouble right now. They're down massive this year. Actually, yeah, since August 7th, 2015, they're down 47%. So they're going to have to figure out a new way to get some more customers in the door. Actually, that's what it was. They were trying to restructure. They were firing a bunch of people and trying to take out more debt and get investments to try and get more customers in the door, instead of trying to find profits in other ways. So this is what you should have been doing for the past 10 years anyway, but what do I know? And the last one was, obviously, we talked about them already, Snapchat. And so just rest in peace, guys. Whoever invested in Snapchat on the first day, down 9% today. Oh my goodness. I feel sorry for them. They're just getting killed by Facebook. And hopefully they can rebound. I mean, this is really tough to see. You know, I always think about it from an entrepreneurial perspective, about someone who started this company from scratch, built it up to a company that was worth, let's see, roughly $30 billion but 3 months ago, and now they're worth $18 billion. Now, only $18 billion, but the company is going downhill, and they may be going bankrupt. They haven't turned a profit yet. They're in a lot of debt, and all of a sudden, you know, your company's going into shambles. So that's tough to see. At what point as a CEO is it time to call it quits? Now, Snapchat still has a long ways to go. They can turn the things around. They have plenty of time. They have plenty of market cap. They have plenty of capital to turn it around. However, it's going downhill fast, guys. I mean, just in the last 3 months, again, down 42%. In the past, since June 2nd, down 26%, today down 9%, and they're losing money hand over fist. They're losing users, or the growth is essentially static right now. So they need to find a way to beat Instagram and Facebook. They need to find a way to beat the giant. Innovate in a way that they did when they started the company. And they were an innovative company. The Snapchat thing, they were very cool. For 2 years, 3 years, they just owned the market for, friends posting whatever, 10-second videos about their lives and all these cool filters and all that. They need to find a new way to innovate. Because guess what? Now Instagram is doing that. And you're not going to beat Instagram. You're not going to beat Facebook. You need to find a new way to innovate. Maybe it's not even directly through your own app right now. Maybe you got to branch out into something. I don't really know how to fix this, but you got to innovate into something that no one else is doing right now. I don't know what that is, but you're going downhill fast. So I think that's going to wrap this video up. What do you guys think of everything I've talked about today? Leave a comment down below. Remember to hit that subscribe and that like button. That really helps me out a lot in English. And yeah, check out my stock market program and the links below if you want to find out what I'm investing in at the current time. Plus, it also teaches you how to set up your account. And you also get like the Wealth Accelerator in there too if you sign up for the membership. And so yeah, you get the Wealth Accelerator course. If you sign up for the membership, that's normally about $200. And yeah, you get some book summaries and stuff like that too. So check that out in the link below. And I'd like to thank you very much for watching. You're all very beautiful people, and I'll see you guys in the next video.